start building custody for institutions like the panelists or the companies represented here in the panel. And we have seen how the traditional institutions have been catching up in crypto. And we have seen how the traditional institutions have been catching up in crypto and learning how to operate and what can be the potential or the importance of this technology. And answering to your question,
if you're coming to this space with a blank slate and you ignore all of the bias and the things you've heard in the headlines and the froth, and you just start with where we are from that lens, it's almost impossible as a thoughtful investor to say I shouldn't be involved. There's something you're actually not being honest with yourself. It's almost impossible as a thoughtful investor to say I shouldn't be involved.
In your letter to partners, you said 2024 has the potential to be what you called a pivotal moment for inclusive growth. So can you expand on that for us and ultimately what it means for the UAE?
24 is a very, very important year, in my opinion, when you look at the next 5, 10 years, 15-year trajectory going forward, particularly when you look at the sectors that the UAE is focusing on, and de facto the sectors that we as an investment institution, Mubadala, are focusing on. So when you look at key themes, energy transition, technology, artificial intelligence, within that, digital infrastructure. These are all spaces that are undergoing a massive transformation. I would say a profound transformation that today, when we look back in 10 years, we will look at 2024 and probably 2023 as really critical foundation years for a massive investment journey in these spaces that investment institutions and countries, in this case, that it took the right decisions in these two, in my opinion, critical years, 23, 24. 10 years from now, we'll look back I think, and we'll be very satisfied if they took the right decisions.
What is going on, everybody? Welcome back to another CYPRX video breakdown. In today's quick fundamental video breakdown, I'm just going to give you a market wrap up of everything that took place this week. Wow, what a phenomenal week to be a trader. So many significant events took place in this market. It was a very volatile market, especially if you were involved in active day trading in either the crypto or forex market. Now, let's just go over the fundamental insights that we give to the private CYPRX community. And if you guys enjoy these insights, keeping you informed with what's going on in the financial markets, do us a favor, smash that thumbs up button and subscribe to the platform. So this week marked a whirlwind of activity in global markets, driven by significant announcements from major central banks worldwide. So here is a recap of the events. Now, we covered all of these topics throughout the entirety of the week on both YouTube, X, and in our private CYPRX Discord, giving fundamental callouts well in advance. We called out some beautiful buy positions publicly on X. We called some beautiful sells on GU, GJ, and gold in our private CYPRX Discord. So if you guys are interested in this analysis throughout the entirety of the week, whether it's the delta zones, the crypto education, or the value in the form of fundamentals or technical analysis that we provide here at CYPRX, make sure that you consider joining our private Discord. We only have about 75 slots left. So what was our primary focus throughout the entirety of the week, this entire week? It was major central banks' monetary policy announcements. As a whole, we had the freaking Swiss National Bank release their monetary policy. We had the Bank of Japan, the Bank of England, the Federal Reserve, the list went on. So massive central banks all across the board. Now, I'm just going to cover a few. Now, our particular focus here at CYPRX was the Swiss National Bank, the Bank of Japan, the Federal Reserve, and the Bank of England. So that's primarily what I'm going to focus my attention on, because the currency pairs that I, myself, and my group trade are predominantly governed by those central banks. So with that being said, the week kicked off with a heightened anticipation surrounding the Bank of Japan's monetary policy decision. This was in Monday's trading session. Now, if you all do pay attention to market dynamics, the market on a broad scale was expecting and leaning towards a yen sell-off off of the anticipation of the Bank of Japan rate hike, which was expected to strengthen the yen overall. You saw articles on Reuters, on Bloomberg, on all of these fundamental analysis websites talking about how the yen was going to sell off. However, Governor Ueda's unexpected dovish stance caught many off guard, expressing uncertainty about current inflation levels. The Bank of Japan overall maintained an accommodative approach despite the rate hike by continuing to purchase Japanese government bonds or JGBs and commercial paper. The Bank of Japan effectively increased the money supply, which led to a weakening of the yen. Now, obviously, of course, the market and the vast majority of retail traders were expecting a sell-off because of the hike that Bank of Japan announced. However, although they did the hike, they're still stimulating the economy. Consequently, other assets gained strength against the yen early on in the week, where we saw buys on EJ, GJ, and other assets that trade up against the Japanese yen. Moving on during the Wednesdays, Thursdays trading session in the UK front, we had mixed data during the London session, and that was also followed by a dovish sentiment from the Bank of England, with no monetary policy committee member voting for a rate hike and Governor Andrew Bailey suggesting that the economy was headed in the right direction for rate cuts. Now, this sentiment overall was digested by the market as dovish, and that weighed on Great British Pound pairs all across the board, resulting in sell-offs on GBP USD and GBP JPY that we personally announced and capitalized on would be a potential outcome here at CYPRX if we saw downbeat or mixed data from the UK and we saw a more dovish tone from the Bank of England, which we got today. Now, over on the US front, things were a little tricky today as a manual retail investor. On Thursday, we had upbeat figures in the US, including the Philly Fed Manufacturing Index, PMI, and we had favorable labor market data with lower unemployment claims. Now, this helped the dollar recover most of its losses that we saw incur from Jerome Powell's dovish speech earlier on in the week on Wednesday. This allowed for the dollar to recover from previous losses from the dovish tone of the Federal Reserve and maintain its gains heading into Friday's session. Now, an intriguing development was the simultaneous strength of the dollar alongside bullish momentum today in risk assets. Notably, XRP rallied from approximately 58 cents to roughly around 65 cents during the day before cooling off. Typically, why am I saying this is weird? Because upbeat economic data, usually coupled with a stronger dollar, triggers risk assets to pull back via the global sentiment leaning towards a more risk-off market mood. However, investors clung onto the narrative today of central banks globally leaning towards dovishness, as evidenced by the dovish Federal Reserve that we got on Wednesday, the dovish Bank of England that we got today on Thursday, and then couple that with the Swiss National Bank and their rate cut announcement today as well. So we can see that this belief in further rate cuts is one of the things supporting risk assets at the time of recording this video. Risk assets all across the board are still showing signs of strength, albeit, yes, we did see a recent market decline due to the previous risk-off market mood, but over the past 2 trading sessions, we have seen that market sentiment improve. So, in summary, this week was characterized by central bank actions and market interpretations that influence currency movements and asset prices globally, still holding on to the narrative that central banks all across the board are going to start to usher in rate cuts. Keep that in mind as we go into this weekend and head into next week. Many blessings to you guys. Hopefully, you all were able to track all of the information that we were pumping out this week, not only on the YouTube, not only on the X space, but also in our private CYPRX community. Many blessings to you guys, always attempting to keep you all ahead of the curve with this information. Stay informed, stay well aware out there, be cognizant, and I will see you guys in the next video breakdown.